Joining us right now is Vivek Arya, senior semiconductors analyst for BofA Securities. And Vivek, there's a lot that kind of goes into the growth that we've seen in semiconductors. You want to lay out the base case for why you think the stocks have been up so much?
Yeah, good morning, Becky. Thank you for having me. A few aspects to this. If we look historically, every time the semiconductor index has gone down by over 20%, we have had a nearly doubling from the lows. So if I look at when the rally started late last year, we are still only halfway done based on those historical trends. But as you mentioned, the more important reason is why is this happening? I think part of the reason is anticipation of an upturn. Because if we look back when semiconductor stocks peaked, nobody was talking about a recession. And then the stock still went down 30–40%. Now nobody is talking about an upturn. And I think what these stocks are trying to anticipate is a global recovery in the demand for electronics. And the third and most important aspect of this is investors realizing just the incredible innovation that is being driven by these semiconductor names. For example, in the whole move to generative AI and large language models with the likes of NVIDIA and Broadcom, in the move towards advanced industrial automation, the move to EVs from analog devices on semiconductor, and from all the money that's being put in the sector because of reshoring and the likes of Applied Materials and KLA. So a lot of innovation happening in the sector. And of course, I think there is a cyclical rebound anticipating that improvement in the global economy also.
Hey, Vivek, I'll give you the argument about innovation. It's clearly impressive what's happened here. But we haven't even gotten into a recession to be thinking that this is really tied to a rebound on the other side of that. You know, you've still got companies that are talking about cutting back. You've got tech companies laying off. And you've got the situation where lately a lot of this trade has probably been driven by people selling financials, looking for safety, and looking to places like technology. Would you give that argument any credence?
For sure. You know, it's a cyclical sector, and every time we forget that it's cyclical, it has a way of rudely reminding us that it is cyclical. But I think it's equally important to note that the sector is driven by what might happen 6+ months from now, not what is happening now. You know, as I mentioned, when it peaked at the end of 2021, semiconductor sales were very strong. You know, the global economy was very strong. Still, these stocks were able to anticipate what might happen 6+ months from now. The other aspect I would mention to you is if you look at the parts of the economy that semiconductors touch. So you mentioned the layoffs in the cloud computing and the data center, but look at where their investments are going. Even in that smaller pie of spending, their investments are favoring the move to AI that is very strong for semis. If you look at automotive, even if automotive units might not grow because of all the macro headwinds, still there is a move to EVs, and EV has twice the content. So I think a lot of it is based on the movement in content, and that I think is a more important factor for semis more than units. But I do agree with you that it is a cyclical sector. It will reflect some of the cyclical dynamics as well.